How Donald Trump's proposed tax cuts could impact you, what you need to know. Hey there. If you're anything like Sarah, a busy mom of two who's always looking for ways to save on her expenses, then you've probably been hearing a lot of buzz about potential tax cuts coming down the line. And trust me, these aren't just any cuts. We are talking about changes that could put more money back in your pocket, especially if you've been working hard and making a living through tips, overtime, or even Social Security. So, let's break it down and see how these proposed changes might affect you, and remember, this all hinges on whether these new tax rules pass through Congress. But first, grab a cup of coffee, and let's dive in. 1. No tax on tips. Many workers, from restaurant servers to Uber drivers, rely on tips to supplement their income. Right now, tips are treated as taxable income, which can feel a bit unfair when a portion of your hard-earned tips goes straight to taxes. If the new tax rules pass, there could be a change in how tips are treated. The proposal includes either eliminating taxes on tips or offering tax deductions when you file your return. For instance, if you earn $5,000 in tips during the year, you could potentially get a $5,000 deduction, meaning no tax owed on that amount. While this could be a massive benefit for those who rely on tips, there are a few things to keep in mind. For example, some workers might try to find creative ways to structure their income as tips to save on taxes. Plus, there are concerns about fairness, as non-tipped workers might feel left out. But let's be honest, most tip earners probably aren't reporting every penny of their income to the IRS anyway, so any deduction could be a nice little win for those who do. 2. No tax on Social Security. This one is huge, especially for retirees. As it stands, Social Security income is taxed. Up to 85% of your benefits might be taxable if you earn over a certain threshold. However, the new tax proposal could eliminate federal taxes on Social Security income. This could result in more disposable income for retirees, particularly those who depend on Social Security for their livelihood. The proposal has the potential to give retirees more spending power, which could also help boost the economy. However, it's a double-edged sword. We also need to keep an eye on the financial health of the Social Security Fund, which is projected to run out of money by 2035. 3. No tax on overtime pay. For those who work more than the standard 8 hours a day, overtime pay is a welcome financial bonus. Normally, overtime pay is taxed at the same rate as your regular income. But if these new tax rules go through, you could see a significant change. The plan is to remove taxes on overtime pay altogether. This could be an incentive for workers to take on more hours, earning more money without worrying about higher taxes. However, there's a catch. Many employees are salaried, meaning they don't receive overtime pay. And some companies may try to avoid paying overtime by capping employees' hours and hiring additional workers instead. Still, this change could be a real boost for hardworking individuals who put in extra hours for the sake of their families. 4. Renewing the 2017 tax cuts. In 2017, President Trump passed the Tax Cuts and Jobs Act, which reduced taxes for just about everyone, especially businesses. Under the new proposal, these tax cuts would be renewed and extended, which would keep the top tax bracket at 37% rather than letting it go back to 39.6%. This move is particularly helpful for business owners, as it includes benefits like a 20% deduction for owners of LLCs or corporations. Plus, there would still be the opportunity for 100% bonus depreciation on business expenses, which could help offset the costs of big investments like machinery. But not all industries would benefit equally. Some sectors might see an increase in their tax burden, especially those who don't fall under the umbrella of business tax cuts. 5. Changes to the SALT cap. The SALT, state and local tax, deduction was a big issue after 2017, when the tax reform limited the amount of state and local taxes you could deduct from your federal taxes to $10,000. This hit people living in high-tax states, like California and New York, pretty hard. If the new tax rules pass, Trump's proposal includes adjusting this SALT cap, potentially offering a higher deduction. For people living in those high-tax states, this could mean they'll have a chance to save a little more come tax time. It's good news for anyone feeling the pinch of local taxes. 6. Eliminating tax breaks for billionaire sports team owners. Now, here's a controversial one. Billionaires who buy sports teams have been taking advantage of tax loopholes, writing off their multi-million-dollar purchases as business expenses. This means that while sports teams are often profitable, the owners get huge deductions that offset their income, basically, a loophole that allows them to avoid taxes. Trump's proposal is to close this loophole, which could stop wealthy team owners from writing off the costs of buying their teams. While this might seem unfair to some, it's likely to be a net win for taxpayers in general. 7. Tackling the carried interest loophole. Here's another interesting one, the carried interest loophole. This allows people like hedge fund managers, private equity firms, and venture capitalists to pay a lower tax rate on their income by classifying it as long-term capital gains rather than ordinary income. Under the new proposal, this loophole could be eliminated, meaning that the ultra-wealthy would no longer be able to avoid paying higher taxes on their income. If this rule passes, it could lead to a fairer tax system for all. 8. Tax cuts on products made in America. This proposal is still in the early stages, but it's worth mentioning. Trump is considering offering tax breaks to companies that manufacture products domestically. This could encourage businesses to keep their operations in the U.S., or at least incentivize consumers to purchase American-made products. This move would be aimed at boosting American manufacturing and could create more jobs domestically, but it remains to be seen exactly how it would work in practice. What does all this mean for you? So, what's the bottom line? If these tax changes are passed, it could result in significant savings for a lot of people, especially those in lower income brackets, or those who work overtime. The proposals could also offer substantial benefits for retirees, business owners, and anyone who receives tips. However, it's important to remember that these are just proposals at this point. The new tax rules still need to go through the legislative process, which means they could face changes, or even fail to pass altogether. As Sarah, who's always juggling work, her kids, and trying to save as much as she can, you might find yourself hoping that these changes do go through. But until they are passed into law, it's wise to keep an eye on developments and adjust your financial plans accordingly. Let's all stay tuned to see what happens next in the legislative process. And who knows, if these tax cuts are implemented, it could mean more money in your pocket to help you achieve your financial goals. If you enjoyed this video, you'll likely enjoy the other videos on this channel. Check them out to expand your financial knowledge and learn how to make the most of your money.